my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin. LME 3-month nickel. 5 weeks ago, I lodged the idea of a large bump and run reversal pattern in both your own and my mind. A huge primary topside target up in the region of 31,200, well up off the top of my daily chart. It is something to bear in mind, stick in the diary if you will, for some future date, but I also looked closer at more nearby and I suppose realistic levels first. This led me to the early February, late March bullish Andrews pitchfork. This had been good at showing the bullish angle of attack of the market. However, late 5 weeks ago and again early 4 weeks ago, the market breached the upper time, currently at 22.85. The breach was repaired, but in doing so the price is swung around 180 degrees and headed lower, hesitating at the middle time 3 weeks ago, which is currently at 29.75, before plunging lower and pushing down through the lower time, currently at 19.665. Plus the combination of the declining gold highlighted long moving average, currently at 17.865, and the medium moving average, currently at 18.050. In the process of moving lower, the market created a late May to date bright red highlighted bear channel, currently at 16.375 to 18.065. This bear channel will dictate the market for the immediate future until it is broken or until the bear channel morphs into something else. So what lies below? Well, not that much, as we're below all the moving averages. We had support at the October 2019 low at 17.815, which I suppose you could tie in with those moving averages, but that is now resistance. So we must look lower to the June 2021 low at 17.095 and the May 2021 low at 16.610. This last support looks the most competent of all of them right now, as it ties in with the late March low and the entrance to the congestion further down formed between November 2023 to February 2024 and between 17.100 down to 15.845. However, an easy glance at this congestion, you can see it may not stack up against the overhang overhead formed since February. Another factor to consider is that we do see prices down if we do see prices down in the 17.100 to 15.845 zone, then the big pattern idea, the one of the descending scallop pattern that morphed into a bump and run reversal pattern with some really large upside potentials, well, that may be further morphing back into a descending scallop pattern, but this time with some significant bearish potentials. Watch this space. LME 3-month zinc. The mid-April to end of May purple highlighted ascending wedge pattern had driven this market higher up as far as the bright red coloured neckline, currently at 31.48, of the September to December 2022 reverse head and shoulders pattern, where it peaked. It's a beautiful peak, where it peaked with a horn top in late May. This actually turned out to be a false break higher, as prices moved back down, rejected by the bright red neckline. Early 2 weeks ago, the market reached the primary target for the neckline, for the horn top, and by the middle of that week, it dropped down to achieve the harder to reach secondary target. The decline continued, but was hesitant when it went below the green highlighted short medium moving average, currently at 28.76, and especially when it reached down to the interesting support, currently at 27.74, the broken upper time of the old May to August 2023 bullish shift pitchfork that had acted back then, it's highlighted in dark blue, back then as an August 2023 to April 2024 upper bull channel line. I said last week, and I quote, "This is the first decent support we have seen, though I would not be surprised if prices do move further down near the middle time, currently at 26.09, that is between the medium moving average, which is currently at 26.85, and the long moving average, currently at 2600. End of quote. I would still not be surprised, and I'll tell you why. Since May, this whole move down has formed a bear channel, which I'd highlighted in pink on my daily chart. That's currently at 24.64 to 27.13. I call it a bear channel, but it's verged on being a descending expanding wedge pattern. I said last week, and I quote, This bear channel is running in the market at this time, and until it breaks or morphs into another pattern, it will continue to do so. End of quote. Well, late last week, prices broke out of this pink bear channel, or rather prices wandered out of the bear channel and stood around just like cattle that have broken out of a field and now seem to know what to do. In this process of standing around, the market has seemingly formed a small possible pennant formation over early to mid-June. That's currently 27.61 to 28.68. Now, I've not highlighted the pattern as it would just obscure this nascent pattern even more. However, and this is not to take away anything from the obvious strength of the dark blue upper tine come upper bull channel line, but we can look at the possible pennant as also a possible form of a halfway hesitation in a potentially much larger move lower. We'll have to see how this possible pennant pattern develops. There's a tongue twister. Possible pennant pattern. We'll have to see how this possible pennant pattern develops as it runs out at the end of next week, and I am sure it will have caused the move, or at least caused another change, another morphing into another pattern by then. LME 3-month tin. 3 patterns formed over April. A bull flag in the first half of April, it reached its initial topside target. Then a spike upwards in the middle of the month, followed by a possible hesitation in the second half of April that looked very much like a bear flag. It was a slim bear flag, though it had potential, but it failed to fulfill this potential. That was not all, as together these 2 congestions plus the central spike, they all made up a very narrow head and shoulders top pattern. A fairly flat neckline highlighted in bright red formed over April. That's currently at 31,555. The potential for such a pattern below also failed, and as I said 4 weeks ago, and I quote, "It looks like the slim head and shoulders pattern formed over April is not a topping action, but possibly a continuation pattern, maybe even morphing into something else." End of quote. Well, that morphing into something else was what happened, with prices reaching up as far as the middle tine, currently 37,255 of the mid-March to late April bullish shift pitchfork that I drew 3 weeks ago. When it was trying up there over the most of the month of May, when it created a more rounded top than the one in April, such that we now have, or look like we have, an April to May double top Adam and Eve time. It also killed off the bullish shift pitchfork, with prices 2 weeks ago breaking below the lower time, currently at 33,930. The move lower attempted to drop down through the 50% Fibonacci line of the March 2020 to March 22 move at 31,845, as well as the bright red neckline, the rising green highlighted short medium moving average, currently at 32,280, and the old December 2023 to April 24 upper bull channel line, currently at 32,445. However, all these supports together caused a reversion back up to the broken lower tine last week. But by the middle of last week, that reversion had also failed, and prices dropped down, failed at that broken lower tine, dropped down to where we are now, testing supports, specifically the green short medium moving average. So where has this left us now? Well, with all this, we still have not completed the whole of the double top pattern, Adam and Eve type. We'd still need to see a confirmed break below the July 2023 high at 32.05 to even start looking at potentials below. Additionally, I have downgraded the late May to mid-June descending wedge pattern that I drew last week. I had doubts about this pattern last week, and they proved justified. As a result of this, and also in the meantime, a new larger pattern has emerged. A late April to date sideways triangle, highlighted in purple on my daily chart. That's currently 31,330 to 34,635. This pattern is much like the double top, still not complete, having had only 2 touches per side, but it has potential. So I could see it working together with the double top idea, or maybe even not. Either way, keep a close eye on the purple lower uptrend, as it could also be seen as potential as a neckline for a double top. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.